Hello traders, Gary Wagner here, approximately 10:30 in Honolulu, 4:30 in New York. It is Wednesday, the 20th day of August 2014, and this is the daily report for gold and silver. Precious metals complex lower except for the exception silver. That's trading a little bit higher this morning. Nearly a new record high in the equities markets. Dollar trading stronger, gold trading weaker on the day. 1290.99, that is our current print on the screen. The market has been as low as 87.20, as high as 98.80, currently trading off about $4 to $4.50. As I said earlier, silver is trading higher, currently up about 5 cents on the day, 1933 on the low. On the high side, 1968, currently 1947. The key element right now that we are looking at silver is whether or not it can hold this 76% retracement level. That is right here, and that, of course, is 1935. More on silver towards the end of the show. So to start today's show off, I do want to look at this very short-term 360-minute chart. And of critical importance to us, and what we're really trying to determine, is whether or not gold is going to hold certain levels of support that I deem pretty important. Actually, I think that they are almost critical now. We did get a low of 88. Market currently trading at 91. You can see that low of 88 right here. And that is a 76% retracement. Now, the retracement that we're looking at is extremely short term because we're looking at a retracement that begins at 1280, takes us to a top of 1320, so a $40 range. And that was this last uptrend or uptick that we saw in the market. We've given back roughly 76% of that. My sense is if we can stay above that point, we are still looking at a model that should provide some support in this market, in this area of 1280, and I would look for a bounce to the upside from here to higher ground. However, if in fact this particular level right in here is breached substantially, and especially if we breach 1280, all bets are off, because that's not signaling a series of higher highs and higher lows. Rather, we would have to start looking at these highs here and seeing that we have lower highs. And of course, a low below 1280 would give us a lower low. So it's really the opposite of what we would be looking for in terms of any type of return to the bull. Now, we're looking at a 720-minute chart, and it really kind of puts the range that we've had, which is a tightening range in the marketplace, into great perspective. Because if we take a look at the following, we take a look at this high, 1391, our next high here, 1331, I believe, we can easily see a sloping or decreasing price range in terms of the series of highs. Now, short term, but if we then go to these lows right in here, attach it to the lows there, we're not nearly at an apex, but what we are getting is this tightening of range when you consider the range over the last, call it, couple of months has been shrinking. Now, do we chalk that up to simply summer trading, or are we really moving into some sort of overall compression triangle? If we are, that would signal a major release of energy, typically that occurs at the apex or the conclusion of this compression triangle. The jury obviously is still out, but that's something that definitely is worth noting. Now, in terms of a short-term perspective, what we're really looking at, as I said, is any kind of sign that we're actually finding some support. Now, this particular chart here, we're trading 91. We talked about the 90.89 area, the fact that 90 is a 76% retracement. And the fact is, if it can hold there, I would then look for a continuation of this particular market that we saw. In other words, we would look at this as a 1. We would look at this as a 2. We would also look at the fact that 2 concluded. However, if in fact this market which has made this top at around 1320, continues lower, what that tells us obviously is that we're still knee deep in this corrective wave right now. Now, the reason that my sense was that we had terminated or concluded that wave is because it came to precisely a 61% retracement, and that is a retracement, of course, of this most recent $100 rally. So it falls within the pretext, it falls within the basic model that we will typically look at. However, as I said, if we see this market begin to drift lower, then it tells us that this last part of our analysis in terms of our very, very short-term wave count is something that we need to adjust, address, and obviously if it breaks through 1280, we're still within the confines of this corrective wave. So traders, we're looking at our daily chart, and one thing is quite evident. Let's go ahead and blow this up just a little bit. But one thing is absolutely evident. When we take a look, this is of course Wednesday of this week, but when we take a look at the activity that we have seen, of course, we got in at 94, I believe. We got out at 98 when the market started to top out here and drift lower. But we can see that over the last 1, 2, 3, 4 trading days, ever since it was unable to take out this top above 1311, and we talked about this pattern called a scouting party right in here, the inability to form that beachhead, which means to trade above it and start forming a base here, cause some downside pressure. And now the real question, as far as I'm concerned, is whether or not we're going to hold 90. My sense is we probably will. And my sense is that we will probably bounce off of that back to the upside. However, until we have any kind of technical evidence of that, I would much rather get into a trade a little bit later at a higher price with technical confirmation than try to take a stab at this market when I think that it is in a very, very precarious state. So traders, what about silver? As I said, we're looking at our daily chart right now. We have broken to the 76% retracement as we have in gold. However, unlike gold, we have seen that low reached yesterday. We have seen it bounce off of that low, currently trading about 15 cents above that. But we have a piercing line. We have an inverted hammer. An inverted hammer, again, is part of the umbrella group of candles. It is the opposite of a shooting star, identical candle that you would find at the top of a market, long tail, small bodied. So we're getting this inverted hammer in a piercing line formation. If we receive confirmation, and a confirming candle, of course, on our daily charts would mean that tomorrow's trading activity would be a green candle, and that green candle would contain a higher high and a higher low than the previous candle, something like this, then that in fact could signal a potential bottom and really support area finally being reached in silver. Now silver, unlike gold, has just been in this dramatic decline. If we take a look at it, this is the beginning of July right in here. So what, the first week in July, it hits its top at about $21.60, and from there drops like a rock through $20, through $21, excuse me, through $20, and finding support in the low 19s. We'll have to see what develops in this market over the next couple of days. But traders, this is genuinely looking interesting to me on a technical basis at this point. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Thursday for another daily update and review. Bye-bye.